Private companies like SpaceX are financed very differently from public companies. Since they don't trade on the stock market, they raise money through private funding rounds, often involving venture capital, private equity, and strategic investors. In the early stages, SpaceX secured funding from well-known venture capital firms such as Founders Fund, Draper Fisher Jurvetson DFJ, and Sequoia Capital. These investors provided capital in exchange for equity, betting on the company's long-term growth and future value. As SpaceX matured, it attracted strategic investors like Google and Fidelity, which invested $1 billion in 2015, largely motivated by the company's Starlink satellite internet project. These types of investors often offer more than just money. They bring technical expertise, market influence, and long-term strategic alignment. Additionally, unlike many startups, SpaceX generates substantial revenue from government contracts, especially with NASA and the U.S. Department of Defense. These contracts help finance operations and reduce reliance on external capital. Another way SpaceX raises funds is through private share sales, often called secondary offerings. In these transactions, employees or early investors sell their shares to private buyers, usually large institutions, or accredited investors, allowing them to realize some returns. Even though the company remains private, SpaceX has also used debt financing in limited situations, but the majority of its funding comes from equity investments and operational revenue. This private funding model allows SpaceX to operate independently of the public market's short-term pressures and focus on long-term goals, like building a Mars colony. If you found this explanation helpful and want more breakdowns of how companies like SpaceX are funded and operated, don't forget to leave a comment, and subscribe to my YouTube channel. Thanks for watching.